The backdrop of global macroeconomic instability and the proliferation of illicit activities in the market, the Nigerian capital market successfully pulled through, with the stock market being ranked among the best performing in the first half of 2022. Despite uncertainties in Nigerian economy such as political risk, inaccessibility of foreign exchange, challenging operating environment, and other global trends that have resulted in an unprecedented exit of foreign portfolio investors in the capital market. Domestic investors trading activities in the market as June 2022 recorded transaction worth 1.4 trillion naira, while international investors trading activities were pegged at 243.5 billion naira. Joining me now live via Zoom to take a look at the performance of the Nigerian market alongside born in the global economic issues and global markets too. He is a stockbroker and a financial analyst, Mr. Rotimi Fakeyojo. Thank you so much, Mr. Fakayejo. It's good to have you on the other side.
Good afternoon.
Yes, let's start with what is your overview now of the global markets in context to the downturns in many economies?
Events do happen continually in the markets all over the world, but the inflation trend in recent times has surpassed the expectation and forecast of many analysts. And this definitely has had a lot of impact on economies worldwide. But be that as it may, I believe some respite is coming all over. We are seeing a seeming turnaround in the Asian market, in the European market, and also in the American market. We are yet to see that kind of a turnaround in the African market or other emerging markets. And I believe strongly that we may see the effects more likely. But what is more paramount right now is that the likelihood of a rising rate hikes in the U.S. economy, and I think coming from the Federal Reserve. But for that, it will have given us a lot of worry if the foreign portfolio investors were still very much in our market. But that is not really giving us a lot of concern as of now. But the implication of raising rate hikes in order to mitigate increasing inflation is definitely going to work for such economies, because most of them are still dealing with a single-digit inflation rate. Especially in America, they are planning to at least to a great extent peg it at about 2%, compared to other countries like us, which we are already having double digits and even a higher trend at over 20%. So I believe strongly that the trend that we have seen in the global economy in the last few months is definitely going to subside to a great extent. We're going to see a lot of respite coming and more belief in what is to come. So there is really not much to worry about because analysts all over the world believe that the worst has happened in terms of inflation trends. So we are likely to see a better things happening very shortly.
Looks very good. The economic crisis, you've identified some of them now: inflation, the currency, and all of that. Deepening, I beg your pardon, occasioned by climate changes and disasters. Now, let's look at how these negatives reflect in various financial markets.
I think this definitely is definitely going to be a thing that we're going to live with. Because the climate change is definitely going to impact more and more. But with the way each part of the world perceive it, there is fairness in some aspects. There is a lot of disgruntlement in other aspects. Like the America and the Western nations, the European nations, they are the more contributors to the climate change that we have seen. Developing economies like ours, and also maybe advanced economies like China, they believe that they've not really had much of impact, and this is their own time to actually see what they can do. But the America and the Western nations are passing the buck on the tables of the developing nations in order for them to make adjustments in climate change development. But I think that definitely is going to be a lot of hot debates going forward, and the impact definitely will continue to affect everyone. So for me, I believe that we that are just like a startup like a country like Nigeria, I believe the burden of climate change should not really be much on us compared to what it should be on those advanced nations that really can bear the brunt. We've seen what is happening concerning the Russia-Ukraine war and the impact on energy. Uh, uh, Germany is to a great extent returning back to coal, and there are still the same people preaching to us about climate change. So I believe that with all of this, the economic impact is definitely going to remain, and it may be more if the necessary things are not done. But definitely, we are never going to see an economy as buoyant as we had in the early 2000s or way back. Definitely, things are going to be getting tighter and more difficult all over the world. And there is really hardly anything anyone can do about it. But the only thing is to soften the impact upon every nation.
Interesting conversation with you, Mr. Fakayejo, as usual. But looking at my playbook here now, do you agree with arguments in some quarters that the flight of foreign investors from the Nigerian exchange has more connections to poor economic performance than the delay in sourcing dollars for profit repatriation?
Well, I want to believe with the class of analysts that the flight of foreign portfolio investors from the Nigerian market is more due to non-availability of foreign exchange. So for me, I think basically that the impact is born out of scarcity of foreign exchange, and not because of economic performance. If you look at the performance of most of the quoted companies, I believe they still remain in the positive. And I believe strongly that that is enough for them to have remained. But for the scarcity of foreign exchange, if you bring your money, not just the scarcity now, but the instability of the naira. So it's definitely affecting everyone, and is the major reason why foreign portfolio investors will not come here. For instance, if you bring about $100 million as at January, and you exchange it for a life, but if and you want to take your money back, even if the money has brought in some level of profit to you, it definitely is not going to be the same thing as you are taking. There's going to be a shortfall in the exchange in the value due to hike in exchange rate. So that basically is the reason why a lot of foreign portfolio investors are not here, and not because of economic performance.
Thanks for that clarity. But the strength of the naira is also the focus point when discussing investment issues in the country. Will the CBN's planned redesigning of the currency bring any desired impact?
Well, most things in Nigeria, a good policy may come up, but the implementation is what may bring more woes than the good things that will have brought into the economy. I say that because ordinarily there have been a lot of sterile funds, sterile naira all over the place. CBN confirmed that I think it's about 80% that is outside the money supply. The money supply, the one within the bank, is just about, or within the system is just about 20 or more percent compared to what is outside. And that is a great anomaly. And for me, I believe strongly that with that is happening, it will have been a very correct thing for what CBN is doing right now. But the monies are coming back in. They are going to cause more disruption within the system because they have not really had much impact on the economy in time past. So we are seeing it's like bringing cedis and turning it to naira and introducing it back into the Nigerian system, because we have used to the level of money supply that we are already used to, with just so much part of it outside the circulation of the circulatory system. So one thing that is very key right now is if CBN will adhere to the letter, the implementation of the change in the face of the naira, and ensure that not the huge deposit that will be coming will be shot out of the system, then definitely is going to achieve the desired result. But if not, with those money coming back in, they're definitely going to find their way back out again. So the CBN needs to put in, I think they're already doing that, along with the ESCC and NFIU, to actually ensure that you cannot bring in more than a specified amount of money into a personal account, and that deposit may not be, such huge deposit may not be allowed into corporate account. If they can adhere to that, then this introduction that the CBN has brought is fantastic and is going to, give us the very huge results that we're going to see, we're going to get. But be that as it may, the more impact is going to be, the less pressure on the naira, which has always been a situation whereby people want to take money out and out of the system to get more dollars, and this money never get back to the circulation. So I believe strongly that if CBN can fully implement to the letter the modalities with which they want to carry this out, I believe it's going to yield a lot of great impact. But for the Nigerian factor, I believe maybe this time around there's going to be a change, but I believe they definitely will have to give it a strong thought in order for us to be able to achieve the good end of this policy.
Indeed, I really appreciate your comments on this. Another angle to it entirely. What dividend patterns do we hope for listed firms at the Nigerian exchange at the close of this year?
Well, I think from what we have seen in the first quarter, second quarter, and third quarter results, they are still very much in the positive, and the trajectory also is upward. And so the implication of that is most companies will still be able to sustain the level of dividend that they paid last year. But if there is anyone that is a foreign investor, it may not mean the same, because if you have to convert the money to naira, to dollars, for you to take the money out to repatriate the dividend, then it won't mean much to you. But for local investors, it's going to be at least the level of previous earnings of dividend, and though the purchasing power may have reduced, but definitely the dividend payout, the quantum is definitely not going to be much impacted negatively as the year will run to an end in December, and dividends will start being paid February, March. So I believe strongly that the dividend payout is not going to be impaired by the time we conclude this year, because of what we have seen in first quarter, second quarter, and third quarter results.
Finally, during the week, I saw a brilliant performance. Airtel Africa, Dangote Cement, and they actually drove activities across the exchange. What's happening across these two companies, or around these two companies?
Well, we know fully well that those two companies, Airtel Africa is the most highly capitalized stock on the Nigerian exchange. Dangote Cement is trailing behind MTN as the third most capitalized. So these three companies, if there is a change in their price, it definitely will impact either positively if the price goes up, or negatively if the price comes down. So we've seen this quite a lot, and the selling Airtel Africa shares, you are actually still in the profit if you bought at the low end when it was less than 1,000 naira. So definitely we can see, because of money needs, people are selling. But for Dangote Cement, I think the volume that we did see that brought down the price was not so significant. So it might just be a one-off investor that was desperate in turning stock to cash. So I believe strongly that we've seen the impact of the drop in the price of Airtel so significantly. Like I did say sometimes that what Airtel Africa has lost in price and value is more than the entire capitalization of Ghana Stock Exchange. So that is to tell you that when some people tell you that Ghana economy is better than Nigeria, I laugh at them, because those two is like comparing grape with lime. So the size are not comparable. So in that wise, I believe strongly that those two companies will definitely continue to impact either when the prices go up and when the price comes down. So, but the good thing about Airtel Africa now is they have declared a dividend of 2.5 cents, so an interim dividend. So I think that also may cascade to letting the price stabilize or evolving a positive trajectory for the price again.
Yeah, finally, let's discuss trading for today. Figures we have in shows the market is 0.05% positive. Again, as we have Cornerstone, Unity Bank, eTransact, Wapik Assurance, Regalinks, Losers, Flour Mills, we have ETI, PZ, Wema Bank, Ikeja Hotels. How do you react directly to this?
Well, I think the market compared to last week, because last week the Osho index closed at 44,269 basis points. So when you do a comparison on weekly basis, the last week was still much better than this week. But be that as it may, I believe with what we have seen, the market is fairly stable, because I was afraid for the fact that the market may drop below 45,000 basis points before. And I was expecting a free fall thereafter. But I think I'm so happy now that we are not seeing that free fall yet, and we may not even see it. So we've seen some measure of stability. So for what we are seeing, I think everybody is crossing their fingers against what may happen politically in the country, and not very much about the economy. So I think that what we are seeing right now, there is a good chance of sustainability of the prices, of the value, and also of the hope in the market.
Mr. Rotimi Fakeyojo, financial analyst, stockbroker, thank you so much for joining us on the show today. Your contributions are highly appreciated. Enjoy your weekend.
A pleasure.